Today, we definitely had good news, better than expected versus expectations heading into the weekend. There is now a mechanism for engagement, and also typically after meeting statements tend to differ, US-China, but this time they are both consistently positive. But of course, there is still a huge amount of uncertainty. 30% is still quite restrictive by historical standards. But today taught us two things. I would say confirm two things for us. Number one, there are lots of uncertainties during negotiations, but there are also immutable laws that can govern the destination of these negotiations. The two immutable laws that we have identified helping us try to gauge the landing zone is number one, the debt dynamics in the US. 25% of the US debt is owned by foreign investors, and there is a debt sustainability concern that one has to consider as one engages in negotiations on trade. And the second immutable law is around supply chain. Supply chains built over decades cannot be ripped out just overnight. And the level of tariffs between US-China were at a level that is essentially trade embargo. And then at this point, we're not talking about higher prices anymore. We're talking about critical access being cut off, no longer having essential goods on the shelf. And these are important considerations that can help land the negotiation. And the last thing I would say that today has confirmed for us is that elevated uncertainty does not mean certainty of a bad outcome. It just means a wide range of outcomes. So this is why we have been positive through this period of uncertainty, because we believe immutable laws can govern the landing spot.
I mean, I guess, Wei, the markets are greeting this as progress. If you look back to 2018, there was a bit of a wobble. There was progress between the U.S. and China, and then there was, the U.S. being backed away from that deal. So what's the best way to position yourself in markets right now?
I think it's important to focus on fundamentals during this period of policy uncertainty. If we look at earnings so far, the earnings season day is just wrapping up. We're still having U.S. corporates surprising to the upside versus expectation at the beginning of the quarter by about positive delta of 2%. We're still seeing companies committing their AI capex. You look at hyperscalers capex commitment that has not decreased, it has actually increased. But of course, companies are citing greater uncertainty. Companies are pulling their guidance. Companies are giving out for the first time scenario-based guidance. So the longer this uncertainty lasts, the greater the risk of this sticking and dragging down overall outlook. But for now, fundamentals are still okay. US data, hard data, is stronger than sentiment, soft data. So fundamentals still support a somewhat positive view on equities, which is what we have. And the last thing I would say, you talked about 2018 as a parallel. The difference between Trump second term and the first term is that in the first term we had the tax cuts before the tariffs announcement, but this time around we had the tariffs, the bet for market bits of the policies being announced first, and then the good bits for markets, good bits of the policy that can be good for markets could be around the corner. We're seeing reconciliation being debated in Senate and House. We're seeing talks of deregulation. So I think these parts of Trump policies could support sentiment later down the line, which again is why we have been positive despite a huge amount of policy uncertainty plaguing sentiment.